Good morning, traders. John Caruso coming to you here for the morning of August 4th with your currency review for the day. First, we're going to take a look at the data we've seen come out. Going back to last Friday, we did see the Employment Cost Index come out, which is watched very closely by the Federal Reserve. Actually showed contraction to 0.2% from a prior reading of 0.7% in June. Looking at yesterday's data, ISM manufacturing showed contraction to 52.7 versus a 53.5 reading in June. And then this morning's factory orders came out in line with expectations at 1.8%. So we have seen some tepid U.S. economic data come out here lately, which is perhaps keeping the USD versus the euro trade kind of at bay at the moment. It's holding that USD back from really extending its gains into new territory. But perhaps more importantly, also keeping the Federal Reserve at bay as far as an interest rate hike goes in this coming September. But we're going to have a better inclination as to what the Feds might do after the employment reading we see at the end of this week, where we're expecting a increase of 212,000 jobs in the month of July. So more on that later. Looking at, again, the USD versus euro right now, the US dollar is trading 97.56, relatively range bound, only down 4 points on the morning. Euro, same thing, 109.61, up 7 points. So a rather dull trade there. The big mover on the day in the currency markets is the Australian dollar. It's up 134 points at 73.87 on the September futures. We did hear from the Bank of Australia in the overnight, and they did remove some key language in their statement, which is creating this move back to the upside in the Aussie. Perhaps we have the beginning of a bottoming process in the Australian dollar. So more to follow later on that. If you want to talk about some of the other currencies, feel free to give me a call. I'm around all day, 800-669-5354. Thank you very much. Options on futures may involve substantial risk. It may not be suitable for all investors.